Next question, Neil, is about the Structured Ownership Program, the SOP. How does that work?
So that is an advanced strategy for
Okay.
people who have a lot of tax liability, essentially. It's too much to go into here,
It
but
is.
basically this falls under what I call the exotics. So there's three classes of tax planning. So class number one is individual level issues, retirement planning and charities and stuff like that. Level two is within your business. There's tax planning opportunities, and that's sculpting cash flows and entity structuring and all that kind of stuff. And level three is the exotics, and this is where you start to incorporate, not incorporate, but you start to have to deal with other parties. It could be buying tax credits. Like the big thing right now is solar tax credits. And actually, the IRS, Serena, you showed me an article or a press release from the IRS saying that
Mhm,
there's a bunch of scams going around with solar
mhm.
credits. And so that's the current craze in the industry. But there's a bunch of them. So the structured ownership program is a strategy that involves going into partnership with other entities that are using very specific rules about how certain types of assets are treated for tax purposes in order to generate large net operating losses for you. So basically, you put in X dollars, you get out a large tax deduction this year, and that's the super short version.
Okay.
Obviously, it's way more complicated than that and beyond the scope of what we go into here because it's going to depend on the person's facts and circumstances as to whether it's appropriate and whether it would work at all, and then what the numbers would actually end up being. That's the basic idea.